Warm greetings and welcome back to Bulletin Bites, brought to you by Rural India, your roundup of the latest developments in law, tax and business across India. Recent indicators continue to place India among the fastest growing major economies, supported by steady domestic demand, policy continuity and sustained investment activity. While global trade uncertainties and currency volatility persist, India's growth outlook remains structurally strong. With this backdrop, let's take a closer look at the key compliance, regulatory, taxation and policy developments from Q4 2025 and examine the trends shaping India's evolving business landscape. Starting with company law and IBC updates, the Ministry of Corporate Affairs, that's MCA, has strengthened its administrative framework by establishing 3 new regional directorates at Chandigarh, Navi Mumbai and Bengaluru, along with 6 new Registrar of Companies offices at Delhi, Mumbai, Kolkata, Noida, Nagpur and Chandigarh, effective 1st of January 2026. To address high filing volumes and stakeholder challenges, the MCA has extended the deadline for filing financial statements and annual returns for financial year 2024-25 to 31st of January 2026, with a waiver of additional fees. Further, the MCA has reduced the frequency of KYC compliance filings for directors and designated partners from annually to once every 3 years. However, any change in particulars must continue to be reported to the Registrar of Companies within 30 days. This amendment will take effect from 31st of March 2026. Moving forward to labour, consumer and environmental law updates. Recent developments in labour and environmental law underscore a decisive regulatory shift. The Government of India has consolidated 29 labour laws into 4 labour codes and notified 21st November 2025 as the enforcement date. Further, on 30th of December 2025, draft central rules for all 4 codes were issued for public consultation with a 30-day window for the Industrial Relations Code 2020 and 45 days for the remaining codes. The Ministry of Labour and Employment launched the Employee Enrollment Campaign 2025, effective 1st November 2025, providing employers a 6-month window to declare eligible employees employed between 1st July 2017 and 31st October 2025 who were not enrolled under the Employees Provident Fund, and to regularize past lapses by paying only the EPF share with minimal penalties. At the state level, the Gujarat Shops and Establishments Amendment Ordinance 2025, promulgated on 16th of December 2025, raised the applicability threshold to establishments with 20 or more workers, extended daily working hours, increased quarterly overtime limits, and permitted women's night shifts subject to safeguards. Finally, the Supreme Court of India, in Confederation of Real Estate Developers Associations of India, that is CREDAI, versus Vanashakti, recalled the Vanashakti judgment, allowing retrospective environmental clearances only for permissible activities, generally subject to applicable penalties or fines. Recent developments are strengthening clarity and consistency in transfer pricing assessments in India. The CBDT's 7th Annual Advanced Pricing System, that is APA, report for financial year 2024-25 marked a record year with 174 APAs signed, including India's first multilateral APA, underscoring the importance of early evaluation and timely filings for tax certainty. On the judicial front, the Mumbai ITAT ruled in favour of Netflix India, recognizing it as a limited risk distributor and rejecting recharacterization by tax authorities. In Shell India, the tribunal upheld at-cost pricing for specialized technical services, reaffirming that transfer pricing rules must respect legitimate commercial and regulatory arrangements. The simplification of GST processes and compliance has remained in focus since its announcement by the Honourable Finance Minister following the 56th GST Council meeting. Amendments have been proposed to streamline GST registration through notified forms supported by circulars and instructions to simplify registration, refund and related procedures aimed at improving compliance and reducing friction for taxpayers. On the customs front, notifications have been issued to enable voluntary post-clearance revision of import and export documents. To simplify duty structures, 31 legacy notifications have been consolidated into a single notification. Additionally, tariff notifications for the second tranche of concessions under the India EFTA TEPA agreement for Iceland, Norway and Switzerland have been issued, effective 1st of January 2026. Further strengthening ease of doing business, SWIFT 2.0, a fully digital trade facilitation platform, has been launched, onboarding animal quarantine, plant quarantine, and food safety authorities in its first phase. This quarter saw significant developments, bringing greater clarity to cross-border taxation. In a landmark ruling, the Bombay High Court, Goa Bench, held that in context of dividends paid by an Indian company to non-resident shareholders, the tax rate prescribed under the applicable tax treaty prevails, even where the domestic company is liable to dividend distribution tax, that is DDT. This decision reinforces the primacy of treaty provisions and provides important certainty for foreign investors. A more detailed update on this judgment can be found on our webpage. Tax rate as per treaty prevails, even where domestic company is liable to dividend distribution tax. In another notable ruling, the Delhi High Court held that services rendered virtually from outside India do not by themselves constitute a service permanent establishment (PE) in India. While the judgment favors taxpayers, the court also acknowledged the evolving challenges of taxing digital and virtual business models, signaling that such arrangements may continue to face scrutiny as global business structures evolve. In today's dynamic business environment, financial and operational agility demand modern solutions that address rising regulatory pressure, talent shortages, evolving complexities, and the need for real-time accuracy. Workflow automation has become essential to streamline routine tasks and embed efficiency into standard processes. By automating repetitive workflows, organizations reduce errors, strengthen control, and improve consistency across operations. This shift frees teams from manual execution, allowing greater focus on strategic analysis and informed decision-making. This result is clear oversight, reduced operational strain, and more resilient foundation for sustainable long-term performance. With this, we conclude our Quarter 4 edition of Bulletin Bites. For deeper insights and detailed analysis, we invite you to explore the full newsletter on our website. If you found this update useful, please feel free to like and share it with your colleagues and networks. Until next time, stay informed and stay prepared.